I want to go back to the assets because this in particular is something I'm super curious about. So we talked about you can block out or identify the IP, your strong management team. Was there other elements that represent increasing the value of a business?
Yes.
Okay. What else?
Um, Consistent, predictable revenue.
Oh, okay. Tell me about that.
So remember that the person who does your valuation eventually,
Yeah.
or if you choose not to do a valuation, sometimes the buyer doesn't require it,
Okay.
right? But regardless, you're going to have accountants involved in the transaction and usually tax attorneys, and you definitely want to factor in the tax consequences of selling your company, and there always are.
Mm,
Because you have accountants involved and they see and breathe the numbers, that's really all they're going to look at. And they're going to start with consistent, predictable revenue because they need a multiple in order to tell you what they think a buyer will pay or
what
what they
I hear
think
the word multiple
valuation.
often. You said they need
Mhm.
a multiple. What exactly does that mean? Can you define that?
That yeah. So what they do is they take your EBITDA,
Yeah.
your which is essentially your cash flow,
Yeah.
and they will assign a number to it that is a multiple of your cash flow.
Gotcha.
So they'll say, and you'll hear people say this, they'll say, I think you can sell for 3 times EBITDA.
Yeah.
Okay. Now, to the business owner, that is completely meaningless,
Hmm.
right? And part of my role, I'm not an accountant. So part of my role is helping them interpret what the accountant or the valuation person is telling them
Okay.
and helping them think of it from a practical standpoint, from a management standpoint. What is it that you want to do to build value in your company so that others perceive it
Hmm.
and to position your company so you get what you want? Because I'm the advocate for the business owner.